Well, again, where do we start there to get this hemmed up? Shakespeare gave us a clue years ago. He said, all the world is a stage and all the people are actors thereon. But my observation in the financial world, when it comes to the subject of finance, they don't even know what the play is about. But worse than that, they get the characters in the play mixed up. But money is a necessity out there to acquire the items of wealth that Paul Cleveland pointed out so brilliantly in the video that we all know about. Money is the medium of exchange whereby we acquire them. All right, now somebody's got to be the banker out there. When you go to a card game or so forth, now, I don't play cards. They still have 52 in a deck. Anyway, somebody's got to be the banker.
Right.
All right. Same thing here. What's happening with dividend-paying whole life insurance? You subscribe to the idea of buying this stuff, you got to pay a premium. Now, that's real money because that's money that you worked for or you provided goods for.
Right.
All right. That's backed up by activity that is taking place. Well, in this same climate, financial climate, though, that we have the funny money out there created by central bankers that is really not money at all. It's just conversation. The life insurance company has got to put that money to work. They put it to work in various and sundry places. And in my book, I point out that one of the places they put it is shopping centers and real estate developments and so forth. Another place they might put it to work is mortgages, like house mortgages, residential mortgages, things of that nature. And another one is that they do make it possible to lend money to you. In fact, if you read the contract, it tells you that you have available 100% of what can be lent from your policy at any one time. Well, if that's true, which it is, it's total control. Well, the life insurance company really is your trustee. One of our practitioners put this together brilliantly several years ago. He says, this is just like a trust agreement. A trust has a grantor. It has a trustee. It has a beneficiary. The grantor creates the trust. Up until that time, it did not exist.
Right.
When you buy a life insurance policy, you're creating a new business from scratch that never existed. Now, the trustee becomes the owner of that property. The trustee becomes the owner of that property. The trustee has got to put it to work to carry out the provisions of the trust. Why did the person create this thing in the first place? Well, he can put it to work in any number of places, but one of the places he can put it to work is with the grantor. All right, so money comes in from these various and sundry places. Oh, by the way, now in the life insurance company, there's any number of places where they might put this money to work. But I want to establish a hierarchy of places. And so I just restricted it to 3 places, shopping centers and real estate developments, mortgages, and the policyholder. Look at the financial statement of any life insurance company.
Right.
Show you very plainly that it's an instrument that have a guaranteed payback schedule. I said guaranteed payback schedule. Now, that's not true of things called universal life. That's not true of things called variable life. But these are products of the brains of Harvard MBAs that it won't hold up over a period of time. They're not taking into consideration what really happens in an economy out there because of central banking. Let's just restrict it to those 3.